Hello, my name's Donald Boyd. I'm the Head of Growth here at Azets. And welcome to part 2 of managing the cost of business crisis. Earlier, we talked very much more on the tax changes that happened in the last budget and the mitigating factors. But today I'm joined by 2 of our experts here in Azets to talk more on the commercial side of managing the cost of business crisis. So I welcome Richard Oddy, who's one of our restructuring partners here, and Lee Humble, welcome back, our Head of Corporate Finance in the UK. Richard, that budget was quite a blow for a lot of people, particularly on the employment side of things with the minimum wages. You know, you must have found that there's a lot of businesses now approaching you worried about their cash flow and what their current business model even.
Yeah, absolutely. I think the difficult thing for a lot of business owners at the moment is that it's been a succession of things. And in the restructuring world, we've waited to sort of say, you know, what is it that sort of, what's the straw that breaks the camel's back, if you like? Because it's been a number of things off the back of COVID which have provided challenges, you know. Not least of all when you're looking at, you know, things like the cost of energy and labour supply and things like that. But one of the things to note is that the UK businesses have adapted and built in a level of resilience, which is really quite commendable. But, you know, from our perspective, I still think there are lots of ways to manage it. There are good habits to have in difficult times, but that resilience is really something that's shining through at the moment. Yeah,
and there's particular sectors as well that, you know, have been particularly impacted. I mean, Lee and I were talking about, you know, you're struggling to go out for dinner in major cities now for under £200 for 2. So we are at the breaking point of the consumer as well. So hospitality and leisure, is that something you're seeing?
It is. I think hospitality and leisure has been a difficult journey for a long time now. I think the one thing that the stats will support is that, you know, construction's difficult. People really underestimate what construction is in the UK, I think. People look at the failures of ISG recently, which is a £2 billion turnover business, on the back of other large failures. And they see those big brands, but what they don't realise is that there's such a huge part of the economy which is baked into that construction environment. So right throughout the Azets network, we see businesses that have got their difficulties in that sector.
Yeah. So Lee, you do obviously all sectors in terms of lead advisory, financial due diligence, buy side, sell side. The construction sector, is that something that you're seeing particular activity there and maybe approaches for some assistance?
Interesting question, because I think as we touch on, you know, construction has faced headwinds for quite some time. But actually, from an Azets UK perspective, that's actually been one of our most active sectors. So across the country, we're fortunate enough to have a lot of construction-based clients where actually we've supported all manners of transactions. So not necessarily the traditional sales side role, but actually we've seen mergers, joint ventures, because I do believe, you know, kind of strength or safety in numbers is a concept which is becoming more real and more sought after, not just because you've got the breadth and the diversification to kind of support and prop up a business, but also you've got a bigger capital base and also an elevated valuation, because as we all know, larger businesses have less kind of dependency risk, less customer concentration, so do fetch larger multiples. But yeah, so it's varied, but, you know, strong businesses are still strong businesses. I think the key is the management teams in situ, but also crucially for us as accountants is the data. You know, do they have the financial information which is up to date, accurate, but can they project forwards? I mean, one of the things myself and Richard quite often look at is, you know, businesses which are profitable, but they have a solvency issue because the cash flow doesn't quite match reality. So one of the questions we quite often ask is, does your funding structure match the reality of your business, which has no doubt been fluid in what is a changeable period?
Yeah, but and it's also seek advice early as well, because that's something Richard was mentioning to me as well. You know, when you've got those cash flow issues that you're talking about, it's seeking out guys like yourself in the early doors.
Yeah, it is. And the resilience that I talk about, I suppose you can sort of offset it in some ways by saying management teams have become very good at operating in challenging times. However, stakeholder management is always front and centre of operating a business, full stop. But definitely, it becomes magnified when you're in that position. So, you know, conversations with suppliers when you're short of cash, conversations with funders. They're the two, and the revenue, etc. But there are ways and means of presenting messages. But being short of cash is not anything to be ashamed of. It's a fact of life for many businesses. Even on the growth trajectory, it can be an acute problem. So open up the conversation early and do it in the right way.
Yeah.
If you've got advisors on board, listen to the advisors, talk to them, they'll guide you through it. Yeah.
And seeking that advice also gives the directors potential protection as well.
It does,
because there's quite choppy waters in legislation here when businesses are balancing solvency or insolvency.
Yeah, and one of the things that we regularly talk to directors about is their sort of duties in that period when a business is in the sort of zone of insolvency. They do have to be careful, but again, it's not insurmountable. It's not overly complex, but speak to the advisors and they will guide you through it, because the last thing you want to be doing is be tripped up by something that you weren't aware of.
Yeah, absolutely. Lee, I mean, going back to sectors there, that are maybe most impacted. I think you've done quite a lot in the care industry in the past as well, which has gone very cyclical. It can be quite frothy in that. Tell me a little bit more of the work that you're doing there.
Yeah, so I think care sector is another one where if you look at the period since COVID, what we've seen is a lot of the COVID-related funding dry up. We've seen a lot of national living wage increases. Supply chain has been a big factor. You've also got the regulatory bodies investigating certain operators and locations for mispractice. So there's a lot of headwinds and challenge for business owners afoot in that sector. But nonetheless, there are still strong operators out there who do well. That is a sector where there are very well-known consolidators who continue to buy. I think the one thing that I will remark is there is funding in the market. It's not the fact that there is no cash.
Yes.
I think what we're starting to see is a lot more exaggeration of some of these circumstances of old. So certain sectors do better. I think a lot of funders will tend to support more mature businesses, which I do think for the UK generally is a problem, because we do have a really blossoming kind of sector of new businesses, new business owners who need that support. And that's certainly something that in the next few years, I think the government are going to have to look at.
So more venture capital, really.
Correct. But I think despite the turbulence and the fluid conditions, it's still a time where people can do well.
Yeah.
I think the key is it's being brave in decisions, but being armed with good advice, armed with the data, keeping your eyes, your ears, your senses generally open to allow you to react in the best way to the circumstances that are prevailing.
Yeah, and Richard, you find that as well. That must be one of the most satisfying parts of your job, where you see a successful turnaround,
Yeah.
You think of a recent example, to kind of share with us?
Yeah, I mean, we've done a few things recently where, I mean, we've recently worked with a retailer that was sort of allied to the DIY sector where, again, using terms like pre-pack insolvency, people think, well, that's not necessarily part of the turnaround mix. It absolutely can be front and centre. And the business we worked with, we saved sort of 300 jobs and the business kept going. And, it was an accelerated sale process. We took it to market and we managed to get a sale in, it was a 3-week process. So not quite as long as our CF colleagues, but obviously a very, very different process.
We would quite like that too.
I suspect so, yeah. But yeah, we come out the other side of that. A lot of the stores have been saved, the jobs have been saved, and it's really satisfying. It really is. And that's the sort of good side of what we were. Again, that was driven by a management team who sort of came to the table and said, we've got a problem. This business model doesn't work. We're heading in the wrong direction. What can we do? What are our options? Where do we go from here? Yeah. And that's a really satisfying part of the job when somebody says, can you work with me to tell me what my options are? Where do I go? Yeah. And you sat there thinking, these people are listening to me. The most strangest thing, there's no better thing I find than when a client rings you on a Saturday afternoon. I don't want a call on a Saturday afternoon, but they're worried it's the weekend and they trust you and they want to. and then they want to know what you think about something, and that's when you think, right, I'm doing my job now.
Yeah, so you're getting them in the rehabilitation ward rather than
absolutely
the intensive care, or God forbid, the Undertaker, or such.
Absolutely.
So it's very, very, very positive there.
Yeah.
And Lee, I mean, you're a fundamentally hugely positive guy. You always, I've got a good thing to say about what's going on in business at the moment. So you found the accelerated sale process as well as a tool that you use
definitely.
in your toolkit?
And I think Richard's touched on it earlier. There are certain businesses that have natural cycles to them, but those cycles have become a lot more exaggerated, a lot harder to predict in what is a changeable environment. The key is, it's having the confidence to reach out and speak up when you think you're going to hit an issue and manage those stakeholders, as Richard said. Mm-hmm. But also, it might be that you're in a very strong position and you can almost capitalize on other people's difficulties, which is not a nice thing to say, but this is where some very good deals can be done. We've talked about joint ventures, we've talked about mergers. It may well be that you end up as part of a larger group with a enlarged client base, a more risk managed supply chain. The key is just having your senses open and reacting to what's in front.
Yeah, and I think it's having that strong advisor is so important these days, because I'm getting a bit long in the tooth these days, but I just can't believe the amount of things that businesses are getting thrown at them. Yeah. Just as we've turned the corner from COVID and CBILS and everything else like that, we've got the Trump tariffs, we've got the hangover of Brexit and all that. But it's back to your point about the resilience of a lot of businesses. That the owner-managed sector in particular really do get their sleeves rolled up in the UK. Yeah,
they do, and I suppose for a lot of them, when that the owner-managed businesses are really interesting, because you've generally got somewhere it's all about building that equity value, it's all about succession, it's all about seeking that exit, and for some people that dream doesn't always, it's not always a reality. So they have to decide, what does my exit look like? How do I structure? What's the right thing for now? If my equity value is not quite there, what am I bridging to? Yeah. And I think that's the hard thing when you've had really good quality businesses that have done all the right things. You talked about the leisure sector there. I think lots of sectors where you've got people who are, they've been on the margins anyway. Maybe it's consumer focused, so they've had a bit of a consumer knock. They've got a lot of lower paid employees, so the national insurance can hit a bit harder. And they've been bridging to that. We can make this work. We can make this work. And now they can get to a stage where, I'm going to have to think about that exit because it is one thing after another. Yeah. But people are not sort of giving up at the first challenge. It's very much, we keep working hard because there's something more to it than just my enterprise value in the business.
I think that's a good point, but also I think there comes a point where you've got to make a hard decision. We've seen certain examples in corporate finance where business owners have gone to market with an aspirational deal value. We've delivered that deal value, and actually, circumstances are a little easier, and we've paused the process, and then within a very short period, that business is no longer in existence. Yeah. So what you need is to consider, if I can sell my business now and take some proceeds, what can I do with that capital? Do I want to go again? Equally, to an extent, don't be scared of failure. No. As we all know, some of the best and most successful entrepreneurs in the world have failed. They've just learned from that lesson, and next time they'll do things slightly differently. And I think the benefit we've got now is it's not the kind of funding landscape of, say, 10, 20 years ago, where one failure means you're not going to be touched by lenders. There are lenders which specialise in turnaround situations that will back business owners who've been through difficult times previously.
Yeah. And Lee, do you find you're speaking to a lot of businesses and they're probably being too focused on operational aspects of the business, and they're not in that strategic mindset? Absolutely. Because at the end of the day, and I might be flippant about this, everyone's going to die. Every shareholder's going to die. So something has to happen to those shares. Yes. And what those kind of options are that you can help them with.
Exactly. I think one of the factors behind that in smaller businesses is the fact that the management team is relatively slim in terms of number of people, but also experience. One of the factors we often see with smaller businesses is the financial infrastructure perhaps isn't as mature or sophisticated as it needs to be in the current environment. You know, as Richard will tell you, if you do hit troubling times and you've got to speak to HMRC, for example, and you want to negotiate a time to pay arrangement, you're going to need some pretty robust financial data. So again, it's management teams having the recognition that this is what I'm good at, this is what I'm not good at, and how do you fill that hole? You know, not everybody can, you know, produce a cash flow forecast. Not everybody understands debit and credits, but there are advisors and there are other people out there that you can speak to support you with that kind of part of your business management.
Yeah, absolutely. Cash flow forecasting is fundamental at the end of the day, but I'm still surprised at the number of businesses that really don't have the basic 13-week cash flow tool up and running.
Having that in place is great. And to me, if I was an FD, I would wake up every single morning, I'd reconcile my bank statement to my cash flow, and we'd move on. And that's how I would work. Not all FDs are as close to the detail, but for me, there's something sort of intrinsically important as a finance leader about understanding working capital metrics. And it's not simply about what are my debtors doing, what are my creditors doing, where's my stock. It's so much more than that. It's about driving a cash behavior through the business. So, you know, the old school dynamic about finance versus sales, you know, sales want to get the numbers out the door. I'll give you 60 days, 90 days. I tell you what, it's a lovely day outside. We'll give you 120 days. And the finance team are sat there going, well, we've paid for those goods 90 days ago. So you've just, you know, so it's having a cash culture whereby everyone's on the same page and they say, actually, when we're delivering this, we understand the impacts throughout the business. It's not just about 3 KPIs. It's so much more than that. And the best in class, if you like. And this is not, you know, just with big PLCs. This is throughout the sort of the UK economy, if you like. Businesses of all sizes can be good at this. You know, focus on what is hitting cash. Yeah. And actually the 13-week cash flow is the output of that.
Yeah. I think the point to raise there as well is I think we all know that the cost of capital has increased. So again, if your debtor balance has increased at the same time, the actual cost of the business is amplified several times over. You know, one of the things that I quite often see with businesses who are looking to take private equity investment or already have it, within a private equity deal, there tends to be a large strip of debt. That debt will be at a premium price. Yeah. So the quicker you can bring your cash receipts through, pay down your debt and manage that cash flow, the better. Because otherwise, it's the example we mentioned earlier where you could be a profitable business, but you've got no pound notes to go and do things.
Yeah, you're over trading or something like that. You see that quite a lot, Richard.
Absolutely. I think, you know, I mean, I'm immediately thinking to a business that we're working with at the moment, which is a pharmacy group. We've worked with a few pharmacy groups, which is a difficult sector at the moment. But, you know, regularly having that conversation around, well, there's my quarterly MI, we're absolutely flying. And you go, well, you're not, because your overdraft is increasing and increasing and increasing. So as an advisor, you're sat there thinking, how am I going to link through cash to profit? Thinking, I'm doing your job for you here. And that's what an advisor's there for a lot of the time. But you think you're the business owner, you really need to understand cash. It's, you know, I know people talk about, you know, cash is so important and all the rest of it, but it really is. And it's the lifeblood of the business. So you've got, everything's got to be focused around that.
Yeah. I mean, I've had many a conversation with a client in the past where they're scratching their heads and going, I'm making all this money, but I'm not seeing it in the bank.
Absolutely.
And it's suddenly you look at the balance sheet and it's back to the point, you can't go along to the restaurant and buy your very expensive meal that we were talking about with a pile of work in progress.
Yeah, absolutely. Yeah,
and I think that's the point. I think people quite often manage by the P&L. The balance sheet is where it all hangs together.
Yeah, absolutely. So one bit of advice to businesses at the moment, they're facing this cost of business crisis. You know, big bad governments all around the world are coming to get you. There's a globalization, and then there's the, I don't know what you would call it, the deglobalization.
Yeah.
You know, reshoring and everything like that. So what one bit of advice would you give to businesses facing that?
So that's sort of two angles to it. Stakeholder management early. So if you're not proactively managing stakeholders, please be assured everybody out there is on the same page as you are. If you approach your funder and say, we've got some challenges, but here's the story, here's the projections, and we're coming to you early because you're a key partner of our business, you're going to get a great response. 9 times out of 10. If you approach your suppliers and say, we need some support, you will get support. As long as it's done in good faith, and as long as you're getting in there early enough, people understand it's a difficult environment. People want to work with you. So don't shy away from engaging with those stakeholders. And if you have got any concerns, or in many respects, if you think you know how to do that, just have a chat with an advisor. There's lots of people out there. Get somebody on board who's been there and done it. We don't know everything, but what we do know is how to talk to funders, how to talk to suppliers, and don't be afraid of having them conversations.
Yeah, so seek advice and manage your stakeholders is really what we're talking about. Yeah. Lee, what advice would you give?
Probably an extension of everything Richard just said. So I'd start with financial management. So, if you're going to manage your stakeholders and you're going to ask with certain things, you need to ask with confidence, you need to ask with certainty, because whilst people will accommodate, once or twice, they might not accommodate 3 times if you're failing to deliver on your promises. So to truly see what you need to have the data to your fingertips, you need to be modelling it, you need to be, running scenarios and coming up with a number of, situations which will tell you exactly what your true need is. And I think the other thing is, we talk about taking advice, but take advice from the right people.
Yes.
I think right now we're in a world where everybody's connected to everybody else. You can go at the pub, you can go on social media.
ChatGPT.
Correct. You can go in 1,000,001 different directions, but speak to people like us who do this for a living. Within our careers, we've spoken to thousands of clients in very similar situations. That wisdom, that advice can make a difference, but also the connections of your advisors can make a big difference too.
Thanks, Lee. That's great advice there, and thanks, Richard, as well. It's basically seeking advice early, stakeholder management, and data. I really hear data ringing through there, Lee. There is no excuse these days. The tech is there to provide you with the data. There is no excuse for not having the data to make those key business decisions. And the quality of your advisor is fundamental as well. And that experience, because there's nothing you guys have not seen, within reason, obviously. So thank you very much for your time today. That's been brilliant. Cheers.
Thank you.